Hello and welcome to our YouTube channel. Today, our lesson is on Takaful insurance, a unique concept rooted in Islamic principles. In this informative video, we will delve into the fundamentals of Takaful, its core principles, and the distinctive features that set it apart from conventional insurance. Join us to gain a comprehensive understanding of Takaful and its significance in the insurance industry. Lesson outline. Topic 1. Introduction. Topic 2. Definition of Takaful. Topic 3. Sharia compliance in Takaful. Topic 4. Takaful structure and participants. Topic 5. Takaful operations and coverage. Topic 6. Claims and surplus distribution. Topic 7. Advantages of Takaful insurance. Topic 8. Takaful insurance in practice. Topic 9. Conclusion and key takeaways. Disclaimer. The information provided in this YouTube lesson about Takaful is intended to offer a general overview and general understanding of the concept and principles of Takaful insurance. However, it is essential to note that the writer and presenter of this lesson are not religious scholars or experts in Islamic jurisprudence. The content presented is based on extensive research and knowledge about Takaful insurance as a financial concept and its alignment with Islamic principles. While efforts have been made to ensure the accuracy and reliability of the information provided, it is advisable to consult with qualified scholars or experts in Islamic finance for a more comprehensive understanding of Takaful from a religious perspective. This lesson aims to provide educational and informational content about Takaful insurance, its principles, and its features in a simplified manner. It is not intended as religious guidance or a substitute for seeking advice from qualified authorities. Every individual's understanding of Takaful may vary based on cultural, regional, and religious interpretations. It is essential for viewers to seek further guidance before making any financial decisions related to Takaful or any other Islamic financial product. The writer and presenter of this lesson bear no responsibility for any inaccuracies, errors, or omissions in the content presented. Viewers are encouraged to seek more information from additional sources to enhance their understanding of Takaful insurance. By watching this video, you acknowledge and accept that the writer and presenter are not acting as religious authorities, and the content provided is for general educational purposes only. Topic number 1. Introduction. Takaful is a concept of Islamic insurance that operates in accordance with Sharia principles. It is a cooperative system where participants mutually contribute to a common fund or pool, which is then used to provide assistance and support to those who suffer losses or damages. Takaful is based on the principles of cooperation, shared responsibility, and mutual protection. In a Takaful arrangement, participants pay regular contributions or premiums into a Takaful fund, which is managed by a Takaful operator. The contributions are used to cover potential losses or claims that may arise within the Takaful pool. The Takaful operator invests the funds in Sharia-compliant investments, and returns generated from these investments are shared among the participants. Unlike conventional insurance, Takaful operates on the principles of mutual assistance and cooperation rather than transferring risk from the insured to the insurer. The fundamental principles of Takaful include: 1. Pooling of risk. Participants contribute to a common fund to provide protection against potential losses faced by any member of the pool. 2. Shared responsibility. Participants agree to mutually support and assist each other in times of need. 3. Sharia compliance. The Takaful operations and investments must adhere to Islamic principles, which prohibit interest, which is also known in Islam as riba, uncertainty, or gara, gambling, known as mesa, and investing in prohibited activities, or haram. 4. Surplus sharing. Any surplus generated from the Takaful fund after meeting claims and expenses is distributed among the participants based on pre-agreed terms. Takaful products cover various areas such as life insurance, health insurance, property insurance, motor insurance, and general business liability insurance. Takaful companies are regulated by relevant authorities to ensure compliance with Sharia principles and the protection of participants' interests. It's important to note that while Takaful is specifically designed to comply with Islamic principles, conventional insurance is also available in many Muslim-majority countries. Individuals have the choice to opt for either Takaful or conventional insurance based on their preferences and beliefs. Topic number 2. Definition and origin of Takaful. What is the meaning of the word Takaful? The word Takaful originates from the Arabic language and carries the meaning of guaranteeing each other or joint guarantee. It is derived from the Arabic root word kafila, which means to take care of or guarantee. In the context of Islamic insurance, Takaful signifies the cooperative and mutual support among participants who contribute to a common pool for protection against potential risks and losses. Origins of Takaful. The origin of Takaful insurance can be traced back to the early Islamic period, where communities practiced forms of mutual assistance and risk-sharing. These practices were inspired by the Islamic principles of social solidarity and cooperation. The formalization of Takaful as an organized insurance system took place in the mid-20th century, primarily in Muslim-majority countries. The first modern Takaful company, the Islamic Insurance Company of Sudan, was established in Sudan in 1979. Since then, Takaful has gained significant popularity and acceptance globally. Takaful insurance operates on the basis of several core principles: cooperation and mutual assistance, Sharia compliance, risk sharing, surplus distribution. Takaful insurance covers various areas, including life insurance, health insurance, property insurance, motor insurance, and general business liability insurance. It offers individuals and businesses a way to protect themselves and their assets in a manner consistent with Islamic principles. Takaful insurance has gained recognition as a viable and ethical alternative to conventional insurance, providing individuals and communities with a means of financial protection while adhering to their religious beliefs. The concept of mutual cooperation and shared responsibility in Takaful. The concept of mutual cooperation and shared responsibility is a fundamental principle of Takaful. Unlike conventional insurance, which operates on the principle of transferring risk from the insured to the insurer, Takaful emphasizes the importance of collective responsibility and support within a community. In Takaful, participants come together and pool their resources by making contributions or premiums into a common fund called the Takaful Fund. This pool of funds is used to provide coverage and protection against potential losses or damages faced by any participant within the Takaful arrangement. The concept of mutual cooperation means that all participants within the Takaful pool are mutually responsible for each other's well-being and protection. Each participant contributes to the collective fund, recognizing that they may face risks and uncertainties at some point in their lives. The contributions made by participants are not treated as premiums, but rather as a form of cooperation and solidarity. If a participant suffers a covered loss or incurs a claim, the funds from the Takaful pool are utilized to compensate and support that participant. This approach ensures that the burden of the loss is shared by the entire community, reducing the financial impact on the individual. The concept of shared responsibility in Takaful also extends to the surplus generated by the Takaful fund. After deducting claims and expenses, any surplus remaining in the Takaful fund is distributed among the participants based on a pre-agreed profit-sharing ratio. This surplus distribution further emphasizes the cooperative nature of Takaful, as participants share in the financial gains collectively. Overall, the concept of mutual cooperation and shared responsibility in Takaful fosters a sense of community and solidarity. It aligns with the principles of social welfare and financial protection, promoting the well-being and financial stability of the participants within the Takaful arrangement. Comparison between Takaful insurance concept and the conventional insurance practice. Takaful insurance and conventional insurance differ in several key aspects. Here are some of the main points of comparison. Comparison number 1. Principles and ethical framework. Takaful insurance operates on the principles of mutual cooperation, shared responsibility, and adherence to Sharia Islamic law principles. It avoids prohibited activities such as interest, known as riba, uncertainty, commonly gara, and gambling or mesa. While conventional insurance is based on the principles of risk transfer, profit maximization, and is not bound by religious or ethical considerations. Comparison number 2. Ownership and governance. Participants in a Takaful arrangement are considered co-owners of the Takaful fund. They have a say in the governance and decision-making processes through a general body or a shura, consultative committee. While in conventional insurance, policyholders are not owners of the insurance company. Decision-making and governance lie in the hands of shareholders and management. Comparison number 3. Risk and responsibility. Participants in Takaful bear the risks collectively. They contribute to a common fund to support and assist fellow participants in times of loss or damage. While conventional insurance transfers the risk from the insured individuals to the insurance company. The company assumes the responsibility of compensating for covered losses. Comparison number 4. Premiums and claims. Contributions made by participants in Takaful insurance arrangements are considered as donations, also known as tabaru, towards the Takaful fund. Claims are paid out from the Takaful fund, and participants may receive compensation in accordance with the principles of mutual assistance and surplus sharing. In conventional insurance, premiums are paid by policyholders to the insurance company, which uses these funds to cover claims and operational expenses. Claims are paid from the company's own reserves and profits. Comparison number 5. Surplus distribution. If there is a surplus in the Takaful fund after meeting claims and expenses, it is distributed among the participants based on a pre-agreed profit-sharing ratio. This surplus distribution is an important feature of Takaful, aligning with the concept of equitable risk and reward sharing. In conventional insurance, surpluses generated by a conventional insurance company are retained by the company and distributed among shareholders as profits. It's important to note that while Takaful insurance is designed to adhere to Islamic principles, conventional insurance is available and widely used in both Muslim-majority and non-Muslim-majority countries. Individuals have the choice to select the type of insurance that aligns with their beliefs and preferences. Topic number 3. Sharia compliance in Takaful. Sharia compliance is a vital aspect of Takaful insurance. Takaful operations and products are designed to adhere to the principles and guidelines of Islamic law, Sharia. These principles ensure that Takaful activities comply with Islamic law and ethical standards. First requirement for Sharia compliance is adherence to the Sharia principles. Here is an overview of the Sharia principles that guide Takaful operations. 1. Prohibition of riba, which means interest. Takaful strictly adheres to the prohibition of interest, or riba. This means that Takaful contracts and financial transactions should be free from any element of interest, ensuring that participants' contributions and benefits are not tied to interest-bearing activities. 2. Prohibition of gara, which means uncertainty. Takaful contracts are structured to avoid excessive uncertainty, or gara. Terms and conditions must be clearly defined and understood by all parties involved. The elements of risk and coverage should be explicit, enabling participants to make informed decisions. 3. Prohibition of mesa, which means gambling. Takaful avoids any form of gambling or mesa. The operations should be based on the principles of cooperation, mutual assistance, and shared responsibility. Contributions made by participants should not be based on speculative gains or chance, but rather on the principles of solidarity and risk-sharing. 4. Prohibition of haram, which means prohibited activities. Takaful operations and investments must avoid engaging in activities that are considered haram, prohibited in Islam. This includes activities related to alcohol, gambling, pork, usury, and other unethical or non-compliant practices. 5. Fairness and equitable treatment. Takaful emphasizes fairness and equitable treatment of participants. Contributions and benefits should be determined based on fair principles, taking into account factors such as the level of risk exposure and the collective welfare of the participants. 6. Transparency and disclosure. Takaful operations should be transparent and involve clear disclosure of information to participants. This ensures that participants have a comprehensive understanding of the terms, conditions, and financial aspects of the Takaful arrangement. 7. Sharia supervision. Takaful companies establish a Sharia Supervisory Board (SSB) consisting of qualified scholars who provide guidance and oversight. The SSB reviews and approves Takaful contracts, operations, and investments to ensure compliance with Sharia principles. By adhering to these Sharia principles, Takaful companies strive to create an ethical and socially responsible framework for insurance operations. Sharia compliance provides assurance to participants that their engagement in Takaful is in accordance with Islamic values and principles, promoting a sense of trust and confidence in the system. The second fundamental of Sharia compliance is investments in Sharia-compliant assets. Takaful companies are required to invest their funds in Sharia-compliant assets, aligning with Islamic principles. Sharia-compliant investments are those that adhere to the guidelines and prohibitions set forth by Islamic law. Here is a guideline on how to adhere to Sharia compliance while making investments in assets. Note all the prohibited investments. Takaful companies must avoid investments in activities that are considered haram or prohibited in Islam. This includes industries such as alcohol, gambling, pork, conventional financial services involving interest, and businesses involved in unethical practices. Strict compliance with Islamic principles. Investments must comply with various Islamic principles, including the prohibition of interest, or riba, uncertainty, known as gara, and gambling, or mesa. Investments should also adhere to the principles of fairness, transparency, and ethical conduct. Conducting of screening process. Takaful companies employ a screening process to ensure investments comply with Sharia principles. This involves a thorough analysis of the underlying business activities, financial ratios, and compliance with Islamic guidelines. Commonly used screening methodologies include the Accounting and Auditing Organization for Islamic Financial Institutions (DAOFI) and Dow Jones Islamic Market Index (GIMI) standards. Permissible investments. Sharia-compliant investments focus on sectors such as Islamic finance, real estate, manufacturing, healthcare, technology, and ethical industries. Examples of permissible investments include Sukuk, Islamic bonds, Sharia-compliant equities, stocks, Islamic funds, and ethical real estate ventures. Profit-sharing investments. Sharia-compliant investments often incorporate profit-sharing arrangements. In these cases, the Takaful company may share the profits generated from the investments with the participants, aligning with the principle of equitable distribution. Sharia Supervisory Board oversight. Takaful companies have a dedicated Sharia Supervisory Board (SSB) responsible for monitoring and approving investment activities. The SSB ensures investments comply with Sharia principles and provides guidance on investment strategies and decisions. Transparency and reporting. Takaful companies maintain transparency in their investment activities and provide regular reports to participants. These reports disclose the types of investments, compliance with Sharia principles, and performance indicators. Sharia-compliant investments in Takaful not only ensure adherence to Islamic principles but also promote ethical and socially responsible investments. By investing in Sharia-compliant assets, Takaful companies aim to generate returns while upholding the values and principles of Islamic finance. Topic number 4. Takaful structure and participants. Takaful operates on a unique structure that involves various participants. Let's explore the structure and participants of Takaful. The first group of participants are the policyholders. Participants, also known as policyholders or contributors, are individuals or entities who seek insurance coverage and protection from potential risks. They contribute to the Takaful fund through payment of contributions or premiums. The second participant is Takaful operator, commonly known as insurance company. The Takaful operator, also known as the insurance company or Takaful provider, administers and manages the Takaful operations. It establishes and operates the Takaful scheme, collects contributions, manages claims, and invests the Takaful fund in Sharia-compliant assets. The third participant, Takaful fund. The Takaful fund is the pool of funds contributed by participants. It is the collective ownership of all participants in the Takaful arrangement. The Takaful fund is utilized to provide coverage and compensation for claims made by participants. Fourth group of participants are Sharia Supervisory Board (SSB). The Sharia Supervisory Board (SSB) comprises qualified Islamic scholars who ensure the Takaful operations and products comply with Sharia principles. The SSB provides guidance, reviews contract, approves investments, and ensures Sharia compliance throughout the Takaful process. Number 5. General Takaful participants. General Takaful participants seek coverage and protection against risks related to general insurance categories such as motor insurance, property insurance, liability insurance, fire insurance, and more. Contributions from general Takaful participants are pooled together to cover potential losses and provide compensation when claims occur. Sixth participants are the family members of the Takaful policyholders. Family Takaful participants seek coverage and protection related to life insurance and family-related risks. Family Takaful provides benefits such as death benefits, savings plans, education plans, and other financial protection for the participant and their beneficiaries. The seventh participants, Takaful distribution channels. Takaful products and services are distributed through various channels, including dedicated Takaful agents, brokers, financial institutions, and online platforms. These channels facilitate the marketing, sales, and distribution of Takaful products to potential participants. The eighth and the last participants are Takaful, or more commonly, reinsurers of Takaful. Takaful is the Islamic equivalent of reinsurance. Takaful operators may transfer a portion of their risks to Takaful companies to mitigate their exposure to large losses. Takaful companies specialize in underwriting Takaful risks on behalf of Takaful operators. The structure of Takaful emphasizes the concept of mutual cooperation and shared responsibility among participants. It creates a sense of community and solidarity where risks and burdens are collectively borne, and participants support each other in times of need. Takaful participants, the Takaful operator, the Takaful fund, the SSB, and distribution channels all play integral roles in the functioning of Takaful and its commitment to Sharia-compliant insurance practices. Roles and responsibilities of the key entities in Takaful: participants, Takaful operator, and Shariah Supervisory Board. The key entities in Takaful, including participants, policyholders, Takaful operators, insurance companies, and the Shariah Supervisory Board (SSB), have distinct roles and responsibilities. Let's explore them in more detail. 1. Roles and responsibilities of policyholders. The main role of policyholder is to purchase or obtain insurance coverage and protection from potential risks. This therefore gives rise to their responsibilities, which will include a. Making regular contribution or paying premiums to the Takaful fund based on the terms of the Takaful contract. B. They are responsible for providing accurate and complete information about the risks they seek coverage for. C. Comply with the terms and conditions. They must adhere to the terms and conditions outlined in the Takaful contract, including payment of contributions and reporting of claims. 2. Roles and responsibilities of Takaful operator, also known as the insurance company. The main role of the Takaful operator is to administer and manage the Takaful operations, ensuring the smooth functioning of the Takaful arrangement. Their responsibilities include a. Establishing and operating the Takaful scheme, including developing Takaful products, setting contribution rates, and determining coverage terms. B. Collecting contributions or premiums from participants and manages the Takaful fund. C. Managing claims, assessing and processing claims made by participants, ensuring prompt and fair compensation for covered losses. D. Investing Takaful funds in Sharia-compliant assets to generate returns while adhering to Islamic principles. E. Maintaining financial stability of the Takaful operations to ensure the stability and sustainability of the Takaful scheme. 3. Roles and responsibilities of Shariah Supervisory Board (SSB). The Shariah Supervisory Board's role is to provide oversight and ensures Sharia compliance in Takaful operations and products. Their responsibilities include responsibilities as itemized below. A. Providing guidance to the Takaful operator on developing Sharia-compliant Takaful products, contracts, and investment strategies. B. Reviewing and approving of contracts and operations of Takaful contracts, ensuring compliance with Sharia principles and the absence of prohibited elements. C. Monitoring compliance of the Takaful operator's operations, investment activities, and financial practices to ensure ongoing adherence to Sharia principles. D. Providing ethical oversight and ensure that the Takaful operator maintains ethical standards, fairness, transparency, and compliance with Islamic values. That the Takaful operator operates in accordance with Sharia principles. The collaboration and harmonious functioning of participants, Takaful operators, and the Sharia Supervisory Board are essential for the successful implementation of Takaful. Participants contribute to the Takaful fund, the Takaful operator manages the operations and funds, and the SSB provides guidance and oversight to ensure Sharia compliance. Together, these entities work towards the shared goal of providing ethical and Sharia-compliant insurance solutions. Contributions and the formation of the Takaful Fund. In Takaful, contributions made by participants play a crucial role in the formation and operation of the Takaful Fund. Let's explore how contributions are collected and how the Takaful Fund is formed. 1. Contribution collection. Participants, also known as policyholders, make regular contributions to the Takaful Fund based on the terms of the Takaful contract. These contributions are typically made on a periodic basis, such as monthly, quarterly, or annually. 2. Tabaru, which means donation. Contributions made by participants in Takaful are considered as tabaru, which means voluntary donation. Participants willingly contribute to the Takaful Fund with the intention of helping and supporting other participants in times of need. 3. Risk pooling. Contributions from participants are pooled together in the Takaful Fund. This collective pool of funds forms the basis of the Takaful system. The concept of risk sharing is central to Takaful, where participants contribute to the common fund to collectively bear the risks faced by the group. 4. Separation of funds. The Takaful Fund is separate from the assets and liabilities of the Takaful operator. It is ring-fenced to ensure that the funds contributed by participants are solely used for the purposes of providing coverage and benefits to the participants. 5. Claims and benefit payments. When a participant experiences a covered loss or claim, they can seek compensation from the Takaful Fund. The payment of claims and benefits is made from the Takaful Fund, allowing participants to receive financial support when they face the risks covered under the Takaful arrangement. 6. Surplus distribution. Any surplus remaining in the Takaful Fund after meeting the claims, expenses, and reserves can be distributed among the participants. Surplus distribution is based on the concept of equitable profit sharing, where participants who have not made claims may receive a portion of the surplus as a cashback or reduction in future contributions. 7. Investment of Takaful funds. The Takaful operator is responsible for investing the Takaful funds in Sharia-compliant assets. The returns generated from these investments contribute to the growth of the Takaful Fund and may help in covering claims, maintaining reserves, and providing potential surplus distribution. The formation of the Takaful Fund through participants' contributions establishes a collective pool of funds that serves as a financial resource to support and compensate participants when they face covered risks. The Takaful Fund ensures the principle of shared responsibility and mutual assistance, promoting a sense of solidarity and community among the participants in Takaful. Sharing of risks and benefits among participants. In Takaful, the sharing of risks and benefits among participants is a fundamental principle that distinguishes it from conventional insurance. This concept promotes the spirit of mutual cooperation and solidarity within the Takaful community. Let's explore how the sharing of risks and benefits occurs. 1. Risk pooling. Participants pool their contributions together to create a collective fund known as the Takaful Fund. This fund serves as a financial resource to cover potential losses and provide benefits to participants who experience covered risks. The pooling of resources ensures that the financial burden is shared among all participants. 2. Risk sharing. Participants share the risks collectively. When a participant faces a covered loss or risk event, they are entitled to claim compensation from the Takaful fund. The funds required to settle the claim are sourced from the contributions of all participants in the Takaful scheme. This sharing of risks ensures that the burden is distributed and not borne by an individual alone. 3. Equitable contributions. Contributions from participants are determined based on actuarial calculations and risk profiles. The contribution amount is designed to be fair and proportionate, taking into account factors such as the type of coverage, the likelihood of risks, and the size of the Takaful fund. This ensures that participants contribute in a manner that aligns with the risks they bring to the Takaful arrangement. 4. Benefit distribution. If a participant does not experience any covered losses during a specified period, they may be eligible for a share of the surplus or profit generated by the Takaful fund. Surplus distribution is a way to provide benefits to participants who have contributed but have not made claims. This reinforces the principle of equitable sharing of benefits within the Takaful community. 5. Transparent operations. Takaful operators are responsible for managing the Takaful fund and ensuring transparency in its operations. They provide regular reports to participants, disclosing the financial status of the Takaful fund, the claims experience, and any surplus or deficit. This transparency fosters trust among participants and allows them to have visibility into the overall performance of the Takaful arrangement. By sharing risks and benefits among participants, Takaful creates a sense of collective responsibility and support within the community. This cooperative framework aligns with the principles of mutual assistance and social solidarity in Islamic finance, enabling participants to face risks collectively and reap the benefits together. Topic number 5. Takaful operations and coverage. Takaful operations encompass the processes and mechanisms through which Takaful coverage is provided to participants. Takaful coverage extends to various areas of risk, including general insurance and family life insurance. Let's explore Takaful operations and the coverage it offers. Takaful operations. Product development. Takaful operators design and develop Takaful products that cater to the specific needs of participants. These products are compliant with Sharia principles and address various types of risks. Contribution collection. Takaful operators collect contributions or premiums from participants on a regular basis. These contributions form the Takaful fund and provide the necessary financial resources to cover risks and provide benefits. Risk assessment and underwriting. Takaful operators assess the risks presented by participants and determine the terms and conditions of coverage. They evaluate factors such as the nature of the risk, the participant's profile, and the coverage requirements. Claims management. When a participant experiences a covered loss or risk event, they can file a claim with the Takaful operator. The Takaful operator evaluates the claim and, if approved, provides compensation or benefits to the participant from the Takaful fund. Takaful arrangements. Takaful operators may seek additional protection for their Takaful fund by entering into Takaful agreements. Takaful functions as a form of reinsurance, where another Takaful operator provides coverage for a portion of the risks faced by the primary Takaful operator. Contribution and premium payment mechanisms. Takaful contributions and premium payments are essential for participants to join and maintain coverage within the Takaful arrangement. Takaful operators offer various mechanisms for participants to contribute and pay premiums. Let's explore some common contribution and premium payment mechanisms in Takaful. Regular contributions. Participants make regular contributions to the Takaful fund at fixed intervals, such as monthly, quarterly, or annually. These contributions are predetermined based on actuarial calculations, risk factors, and the coverage amount desired by the participant. Wakala fee. In addition to the regular contributions, participants may pay a wakala fee. The wakala fee covers the expenses incurred by the Takaful operator for managing the Takaful operations, such as administrative costs, marketing expenses, and claim processing fees. The fee is deducted from the participants' contributions. Single contribution. Some Takaful products allow participants to make a one-time single contribution at the inception of the coverage. This option provides immediate coverage for a specified term or until a particular event occurs, depending on the product's terms and conditions. Installment payments. To make it more affordable for participants, Takaful operators may offer installment payment options. Participants can pay their contributions or premiums in smaller, periodic installments over the coverage period. Automatic bank deduction. Takaful operators often facilitate automatic bank deductions to streamline contribution payments. Participants provide authorization to the Takaful operator to deduct contributions directly from their bank accounts on a specified date. This method ensures timely and convenient payment without the need for manual transactions. Standing instruction. Participants can set up a standing instruction with their banks to transfer the contribution amount to the Takaful operator's designated account regularly. This mechanism allows participants to manage their contributions conveniently and ensures timely payment. Online payment portals. Takaful operators may provide online payment portals or mobile applications through which participants can make contributions and premium payments electronically. These platforms offer a secure and convenient way for participants to manage their payments. It's important to note that the specific contribution and premium payment mechanisms may vary depending on the Takaful operator, the Takaful product, and regional regulations. Participants should refer to the terms and conditions of their Takaful contract or consult with the Takaful operator to understand the available payment options and select the one that best suits their preferences and financial capabilities. Different types of Takaful products: life, health, property, motor, etc. Takaful offers a range of products that cater to different areas of risk, providing participants with Sharia-compliant coverage. Here are some common types of Takaful products. Life Takaful. Term Takaful provides coverage for a specified term or period. If the participant passes away during the coverage term, the beneficiaries receive a death benefit. Whole Life Takaful offers lifelong coverage with a death benefit paid to the beneficiaries upon the participant's death. It may also accumulate cash value over time. Education Takaful focuses on providing financial support for a child's education expenses in the event of the participant's death or disability. Savings and Retirement Takaful combines protection with long-term savings and investment components, allowing participants to accumulate funds for retirement or other financial goals. Health Takaful. Medical Takaful provides coverage for medical expenses, hospitalization, surgeries, and related treatments. It helps participants manage healthcare costs and offers financial protection against unexpected medical emergencies. General Takaful. Property Takaful covers risks related to properties, including homes, buildings, and assets, against perils such as fire, natural disasters, theft, and damage. Motor Takaful provides coverage for motor vehicles against risks such as accidents, theft, and third-party liability. It fulfills legal requirements and offers financial protection to vehicle owners. Liability Takaful offers protection against legal liabilities arising from third-party claims, such as personal injury, property damage, or professional negligence. Marine Takaful covers risks associated with marine transport, including cargo damage, loss, or liability during shipment. Family Takaful. Marriage Takaful focuses on providing financial support for marriage-related expenses, including wedding costs and related events. Hajj Takaful offers coverage specifically designed for Hajj and Umrah pilgrims, providing financial protection and assistance during the pilgrimage journey. Home Takaful provides coverage for homeowners, including protection against property damage, theft, and personal belongings. Takaful operations and coverage span various aspects of risk, including general insurance, such as motor, property, liability, marine, and medical, and family insurance, like term, whole life, education, and savings. The operations involve product development, contribution collection, risk assessment, claims management, and, in some cases, Takaful arrangements. Through these operations, Takaful aims to provide Sharia-compliant coverage and financial protection to participants. These are just a few examples of Takaful products, and the availability of specific products may vary among Takaful operators and regions. Each product is designed to address specific risks and provide participants with tailored coverage that complies with Sharia principles. Participants can choose the Takaful products that align with their risk profiles, financial goals, and personal circumstances. It's advisable to consult with the Takaful operator or a qualified financial advisor to understand the features, terms, and conditions of each product before making a decision. Coverage and benefits provided by Takaful policies. Takaful policies offer coverage and benefits to participants based on the specific product and type of coverage chosen. While the coverage and benefits can vary depending on the Takaful operator and the product's terms and conditions, here are some common coverage areas and benefits provided by Takaful policies. Death benefit. In life Takaful policies, a death benefit is provided to the beneficiaries upon the participant's death during the coverage period. The benefit amount is predetermined and specified in the policy. Disability benefit. Some Takaful policies include a disability benefit, which provides financial support to the participant in the event of total or permanent disability. The benefit helps cover medical expenses and offers support for ongoing living costs. Medical expenses. Health Takaful policies typically cover a range of medical expenses, including hospitalization, surgeries, diagnostic tests, medications, and treatments. The coverage may extend to both inpatient and outpatient medical services, depending on the policy. Property damage. Property Takaful policies protect against property damage caused by perils such as fire, natural disasters, theft, or vandalism. The coverage may include the repair or replacement costs of damaged property, up to the policy's specified limits. Personal liability. Takaful policies may include personal liability coverage, which protects the participant against legal liabilities arising from third-party claims for personal injury or property damage caused by the participant's actions or negligence. Vehicle coverage. Motor Takaful policies provide coverage for motor vehicles against various risks, including accidents, theft, fire, and third-party liability. The coverage may include repair costs, replacement of damaged parts, and compensation for third-party damages. Education support. Certain Takaful policies offer education support benefits, providing financial assistance for the education expenses of the participants' children or beneficiaries in case of the participant's death or disability. Savings and investment. Some Takaful policies combine protection with savings and investment components. These policies allow participants to accumulate savings over time and potentially earn returns on their contributions, helping them achieve long-term financial goals. It's important to note that the coverage and benefits provided by Takaful policies can vary significantly based on the specific product, coverage type, sum assured, policy duration, and other factors. Participants should carefully review the terms and conditions of the policy and consult with the Takaful operator or a qualified financial advisor to understand the coverage details, limitations, and exclusions before purchasing a Takaful policy. End of part 1. Let's continue with part 2 in the next video.